Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at gold and silver, updating our Elliott wave counts and doing some basic technical analysis. So we're going to start here on gold. We're on the daytime frame. We're just going to zoom in to everything since the high back here in 7th of August last year, 2020. So we've been in a long correction, and it may be over. It may have actually been over for a while now. I am starting to lean more into this bullish count. There is still the possibility of it being bearish, but I think we're about to test a significant level, and I think if we break that level, that would be pretty strong sign that the bullish count is the correct one. So what I mean is the level I'm talking about is this long-term channel since the high. So back here in August last year we came down here in 3 waves, and what I'm thinking is a double zigzag ABC, ABC, ABC here. Well, 2 zigzags join via a flat in the next wave here, so still a double zigzag down into a primary 4, and I think we've gone 1, 2, 3, 4, extension in the 5th here, minor degree into an intermediate 1, A, B, C, zigzag into here, then 1, 2, a minor degree, and now 1, 2, a minute degree. So I'm looking, now that we're into what I think is minute degree 3, these are not targets, they're just where I bundled up the Elliott wave for placement in the future. I would like to see, now that we've come up here in a 1 and a 2, to break this here, perhaps at a smaller wave degree come up in a 1, 2 of a minuet degree, and then push up into this minute 3. And how high this goes, we can put a couple of projections in, but it should clear this previous high, and I think that would be another significant level. So if we break out of this channel, clear this previous high, which is the wave 1 high here, that definitely increases the probability of this bullish interpretation being correct. So let's just now come down to the 1 hour time frame here and have a quick look at how I've gotten around this recent price action off of the low. It is a little tricky. Essentially, this run up here is clean enough, and this move down here, it looks like a double zigzag. Now it could just be a zigzag with 1, 2, 3, 4, 5, A, B, and then a diagonal in the end, but this pattern to me here looks more like 535, and therefore I think could be a zigzag in itself. Same here, 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5. You see, so this to me looks like a zigzag, and this looks like a zigzag. So I'm going to say double zigzag here as opposed to just ABC, but you could probably get 1, 2, 3, 4, 5 A, 1, 2, 3 expanding flat here, and then 1, 2, 3, 4, 5 maybe, or 1, 2, 3, 4, 5 into a diagonal ABC. So it doesn't matter either way. Here, this is very problematic, and the only way I've really been able to get around this problem, interpreting this bullishly, I did struggle to come up with something for this, but I finally settled on something, and what I've gone with is 1, 2 off the low here, 3, and then a 3 wave expanding pattern into a 4, and then 1, 2, 3, 4, 5 into a 5 into a 1 at minute degree, and then we've gone A, B, C here into minute at 2. Wave 2, so this is another expanding flat here, so we go expansive B wave above where the A began, and the C completes beyond where the A completed. So that's it really, that's the best I've got at the moment. It's not particularly neat, and this here has to be counted as a diagonal, and it's not a pretty one either. And the only other thing I can think of is that we have to try and get the 1 to finish up here, and that this is a corrective move from the 1 here into the 2 down here, but getting there is very difficult. We seem to have a 5-wave structure to here perhaps, but we have this 3-wave move here. This could be WXY or ABC expanding flat again, or we go 1, 2, 3, 4, 5, this becomes a 1, and then we've got to somehow, I can't find a position for a 2 that works, because the wave 3 has to divide as a pure impulse. So this is the best I can do so far. It's not pretty, but I think could be correct. And if we break, we seem to be impulsing now, so if we break out of this channel, that would be a positive sign. So let's just have a look now and assume that this wave, minute wave and minor wave are placed correctly. So let's project the minor 3 here using our fib extension tool. So at minor degree, if this is intermediate 1, intermediate 2, and then this is minor 1 and minor 2, we're building a 3, an extended 3 within a 5th wave. Now there is a more bullish count for gold, which suggests that this is a wave 1 into a 2 at a smaller degree, at intermediate degree, and the primary was a couple of years ago, a few years ago, back through 2016 to 18. That's an option, but I don't really want to consider it until I see much more bullish action. If we go well beyond the wave 5 targets, then we can consider that to be the alternate count. I'm building it as an alternate count anyway, but until we see more bullish action, I don't think it's really worth getting that kind of moon boyish. We should just stay with our initial assumption that we're coming up in a 5th wave. So this projection puts the wave 3 here at minor degree, so that would clear this previous high, so that would be very reassuring. And then we'd have 4 and then 5, and then that would be intermediate 3. So I think given the depth of the intermediate 2, we should check how far or how big the wave 3 is at intermediate degree as well, because I think it's going to be significantly further along, a bit higher. So this is our target for an intermediate 3. So as you can see, that's quite possible. You could come up in a 1, 2, 3, 4, 5, and this would give you your 1, 2, 3 at intermediate degree, and then 4 not overlapping, and then 5, off we go. Now it's also possible that it could go much higher. We could hit a higher extension of 2618 or maybe even 3618, but let's just get out of this channel first. Let's get out of this channel, break this previous high, this wave 1 high here, and break all of this downward corrective trend we've been in, and then I feel much more confident. So that's the bullish count. I do have a bearish count, so let's just add these to the primary count, switch that off. The best idea I can come up with here for the bearish count, just because there's so much overlapping going on, and this is getting close to being invalidated, very close to being invalidated. I'd have to reconsider the position of this minor 2, I think. But the best I can come up with here is that we've got a diagonal into an A, then we've got a B, and then we're going 1, 2, 3, 4, 5 into a C, testing the top of the channel, then coming back to the lower channel here and having a much deeper correction. Now I'm not sure. I think this would have to be the primary 4 at that point, complete over here rather than over here, or it's a wave 1 of larger degree into a wave 2, but we're about to invalidate the top of this too, so I think really if I'm going to consider this, I need to just move this out of the way for a minute. I'm going to have to say 2 over here perhaps, then this is a 1, and A, B, C, A, B. It's tricky, so let me just move this out of the way for a minute. I'm going to just have a bit of a live rethink. I think the only way we can make this work now is if this is the 1. We say 1, 2, and then we say 3, 4, 5, and then A, B, bring that 0 back to here, A, B. That would be a bit of that could be a fake out the channel into a 2, and then continue down. I'm not particularly confident in this one. Trying to get a valid bearish count has been a bit tricky because it's just there's been so much overlapping. What am I looking for here? 3. There's just been so much overlapping price activity during this whole correction. If it had looked impulsive, you know, from the high, so we had just gone 1, 2, 3, 4, 5, no overlapping, 1, 2, 3, then I'd be like, yeah, well, this is an A, this is a B, and then we're going to come down a nice 5 wave move in a C. But we've got all this overlapping price action. So, you know, overlapping here, overlapping here, overlapping here, overlapping here, overlapping here. It's just, you know, been a bit tricky. So it's either a WXY double zigzag complete down here, or it's a diagonal into an A with a B here. Now we're going to probably get an impulse down to here in the C, having put in a diagonal in the A. But that's the best I can do for a bearish count. I think I'm leaning into the bullish count. I'm not super confident, but once we get through this downward channel and we take out this high back here at 1917, great movie, around here on the 1st of June, get through that, break this channel, break that high, put in an impulsive move up here, come up to some of those extensions for minute wave and minor wave 3, and I'll feel way more confident that we are bullish and we're going up in that 5th and final wave, which means we will go on to take out this high and likely extend considerably further beyond that. Right then, so that's gold. Let's go over and have a look at silver. Okay, similar in terms of confusing price action, but there is one benefit to silver, I think, making it a little easier to understand, and that's this expansive high here. Because we came to a new high and we appear to have free wave move here, free wave move here, then this has got to be an expansive B. I don't see this as an impulsive move after a corrective move to a higher high, so I still think this was the actual high back here in August. It makes sense because that's when gold topped, so gold and silver both topped in August 20 and then went into a corrective phase that they've been in ever since. So I'm seeing this as free wave move down into an A, W, X, Y into a B, and then now I think we've got a diagonal 1, 2, 3, 4, 5 with a throw over of the trend line here in the 5, which is very normal, and then back above it, back to test it, and now we're off on our way and running. So this, I prefer this bullish count and this bullish interpretation. Now it's basically the same thing I've been working on for a while, except I've changed it to an ABC because I thought it was 333 given this pivot here, but I'm not living with an expansive X wave, which would be WXY. I want to consider that as a B, so I'm going to count this as 335 with a diagonal in the 5th. I think that works out better. I'll back this count for as long as the recent lows hold here. That's the idea of a completed overlapping diagonal ending with a throw over of the wedge, of the descending wedge. If this low gets taken out here and we have done something like this and then come down again, then the bearish count would be the one I'd be backing, which is still on target to head down into this golden ratio down here, the 61.8, into this node of volume. So we'd be pushing a little lower, but we may have completed. If we have completed, then it's bullish and we're now in the 1-2 at -degree and we're going to fly up in a 3. Okay, so let's just have a look at the bearish option. I don't think there's anything else to really explain there. We just need to add this to the bullish count, and that's the fib. Okay, so let's turn it off and let's bring up the bearish count. Very, very similar. It's the same count. It's A, B, but this is a larger diagonal. 1, 2, 3, 4, 5, like that. And we're just going to push down into this support here, around this volume profile, peak in the volume profile, around the golden ratio, into a deeper 1-2, 61.5% retracement. So if that's the case, then this is just it's the same thing again, but instead of going 1, 2, 3, 4, 5, it's 1, 2, 3, 4, 5, and there's an impulse in here of 5 waves down. Now the problem I've got here is I've counted this as an impulse, right? But now I've got this overlap. So what I need to do is I need to relabel this as a series of zigzags, because I'm saying it's an ending diagonal. And now I was thinking it could be a diagonal in the 1 here, if you see what I'm saying, diagonal in the 1. And then I could go 2, 3 and 4 beyond the 1, so it's an impulse in a C down into a 5, but that isn't possible anymore, so this needs relabeling as a bunch of zigzags. So let's just do that now while we're here and see what we can find. We've got our zigzag for our 2. 4 looks like an incomplete zigzag. It's going to come a little higher. if this is an ending diagonal on a larger, a larger version of the same ending diagonal. So let's just say that's got to be the A, that's got to be the B, and this is 1, 2, 3, 4, 5 in the C. So that's your first zigzag into the 1, A, B, C into the 2, 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5 diagonal in the C here. So that's your next zigzag, 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5, C. That's the best I can probably do there. Then this is going to be A, B, C zigzag here into a 4, which is overlapping the 1, and then we'll finally get that fifth and final zigzag down in a 5, something like this. Okay, or maybe we'll only just clear the 3, I don't know, and we'll stop at the 50 instead in this big void here. Sometimes these big voids in the volume profile, as you can see, this is the result of these gaps here. There's literally no market acceptance here at all. We didn't even stop to check the price apparently, because we've just got blue blocks and no selling at all. So just went straight through this. There was no market activity here at all really. So this could be one of those circumstances where instead of finishing around a peak in the volume profile, we want to come back into an area that we didn't test, that the market didn't have time to appreciate or assign any value to from a market acceptance point of view. No trading went on here. That would also fill these gaps. So maybe another zigzag down just beyond the 3 into the 5 would fill these gaps, and then that would be the bearish count complete, the same as the bullish count, just lower, and then we go off on the 3. So that's the way I see it at the moment. Like I said, I might as well hang my hat for the meantime on the bullish count while these lows here on the 29th of September hold. For as long as those hold and we continue to impulse higher, I will remain bullish. If we get a completed zigzag up to here and then we start to get a 5-way structure down, I will probably change my mind and say that we should have 5, 3, 5, shouldn't we? Because it's going to be a zigzag, so the move down will look impulsive. If we get an impulsive move down off of a 3-wave retracement, I think I'd be looking for these lows to break and a further move down. So, but in the meantime, let's just stay bullish, I reckon. There's no reason to doubt it until we see evidence to the contrary. So let's now hide our counts out the way. I'll add these zigzags I've just put into the bearish count. La-di-da, save that. Hide it out of the way. Let's bring up our indicators here. And let's bring up our moving averages, and let's bring up the volume. Okay, so let's get rid of this fib retracement as well. We don't need that. Let's lock that in place before I forget and hide it. Right, so just need to fill out the rest of my moving averages. I've got them all switched on. Why aren't they visible? Okay, bear with me a moment. Oh, here you go. Sorry, you have to switch them on in the inputs tab. Oops, daisy. There we go. We got there in the end. Brain's working a little slowly today. So we have 4 exponential moving averages: 10 in yellow, 20 in blue, 60 in orange, 250 in green. We're on the daily time frame currently. We have an RSI set to a 10 close with a green 30 level representing oversold and a red 70 level representing overbought. We have a MACD also with our bright red and green histogram here in the middle, and we have a 10 for the average and a 20 for the signal. So 10 is the blue, 20 is the orange. So what can we see here? Well, we have dragged the 60, the 10, the 20 and the 60 through the 250 exponential moving average on the day time frame, and we got a death cross here. As I point out, the death cross is often a sign that we're about to put in a bottom very soon afterwards. As you can see, it was just a few days. Then we put in a low. It's not necessarily the bottom, but it's very common after witnessing a death cross that you'll get a low very soon. This is often, as I've pointed out many times, this often draws more liquidity into the market. They see the death cross, a bunch of shorters show up, and that's the perfect time for the shorts which have been in the whole time to close at a low and pivot using the liquidity provided by people shorting off of the death cross. That's why it's just a bit of a setup. Essentially, it tends to suck people in and then reverse and screw them over. The same happens very frequently with golden crosses. So up to the 250, peak just above it, back below the 10, 16, and 20, then back above. So we're currently holding price above the 10, the 60 and the 20 exponential moving average. The 10's gone back through the 20 and through the 60 and is holding above both of them currently, but that 250 has proven to be pretty significant resistance. We want to see a continuation move through that 250, and that would be reassuring. What's not particularly reassuring at the moment is the lack of volume supporting this move, but honestly, looking at the price action and the history of the price action and volume in this ETF, we tend to get the spikes around the conclusions of the moves, which is, you know, what we'd expect to see, the crescendo of selling, the crescendo of buying. But a lot of the really aggressive moves up are often not really supported by much volume. The increase is there, but it's minimal. So we've had an increase in volume towards the lows here. We haven't had a big spike around the low like we've seen here, here, and here around the higher or low. So perhaps there is more selling pressure to come in to finally exhaust things, get some volume recorded here. But I've seen initial rallies start on very low volume, so it's just a little suspicious, something to keep an eye on. However, the RSI gives us a very strong bullish divergence between the low on the 10th of August and the low on the 29th of September, which were, of course, the opposite. They were lower lows in price, higher lows in RSI, and we have the same on the MACD here. We have higher highs, higher lows in price here, with a buy signal being recorded here on the 4th of October. And since the 4th of October, which is the low pretty much, 29th, here's the 4th, buy signal we've now rallied since. Came up to overbought conditions of a daily time frame, pulled back into neutral zone. Another push up into overbought would be convincing. A move back above the zero bound in the MACD here is positive as well, but we'd like to see more green on the histogram and more positive push to higher highs in the MACD as well. Would be very reassuring if we took out all of these highs in the MACD which were during the corrective period here. So if we can clear all of this, get into much more positive momentum, that would be reassuring also. So that's something to keep an eye on, and that would marry up nicely with the idea that we've entered a wave 3 at minor degree, as would overbought conditions, because, you know, when we're in a bullish phase, we get a series of highs above the overbought condition and very little activity below it in the oversold area. And when we're in a corrective phase, we get significant activity below the oversold area and very limited activity in the overbought area. So that's the difference between impulsive behavior on the RSI and corrective behavior on the RSI. And the same, we have the same working with the MACD, where we don't have oversold and overbought, but we have, you know, aggressive bullish momentum above the zero bound, acceleration supported in the histogram, and then we have coiling consolidation before we come up and break all of this range. So there you go. If we do now get back up into a significant overbought condition, like we did here, like we did here, like we did here, that would be very reassuring that we're now impulsing again. We're going to come up into overbought, have a nice pullback, keep doing this and staying up in this bullish area, avoiding a prolonged periods of oversold conditions. So there you go. All in all, things are looking positive, but very early days in what could be a next impulsive move. And in these early days, where we're below all these moving averages, we've had a sustained period of negative momentum and price action. It could easily just be a counter trend move to the upside before dumping lower. So that's just what we have to be on guard against after such a long correction, because a long correction can go on longer. Alright, then let's now move over and have a look at gold, and we'll switch off the primary count here, the Elliott wave stuff, get rid of its channel, get rid of its price label, and we'll do the same. We'll bring up our indicators here, we'll bring up our moving averages. We can't get volume on the CFDs on gold. We can get the volume profile, but for some reason traditional volume is not provided by the vendor. So I've started charting GDX and GLD at the moment to see which one I prefer. I'm still working on them at the moment, but I might switch over to the ETF so that we've got SLV ETF and a gold ETF as well, giving us a few more analytical tools. So what can we see here? Once again, I've switched off several of the moving averages, so let's just get those back on. Oh no, I haven't. Beg your pardon. Why can't I? Oh no, they're here. Sorry, I just can't see them clearly. Let's come down to the daily time frame. Start here. Okay, back above all the moving averages for the moment. 10 is through the 250, through the 20, through the 60. Price is holding above all of them after coiling for a significant amount of time here. We've got a series of higher lows in the RSI as we continue to climb. Well, we're not doing much in price at the moment, so a bit of a hidden bullish divergence here. Not a true bullish divergence between any of these lows, as they have synced up with price. Low, high, low, high, low, low, high, low, high, low. Not really true bullish divergence here either, as we didn't get a higher low. We did get two lows at the same in the RSI with two lower lows here in price. Now the MACD has been doing something slightly different, showing a sustained increase in momentum from positive to negative. Let's just remove these for a moment. So back above the zero bound, nice green action here on the histogram, just taken out, well not quite, we've got this high to take out in the MACD, shifting from negative to positive momentum, as we saw the shift here from positive to negative momentum. So now what we really want to see is this high and this high, this big swing higher here in momentum, get eclipsed by another big aggressive move up here in the MACD. That would be a sign that we've shifted into a more prolonged positive state of momentum. And yeah, we'd like to get back into the same kind of bullish activity we saw in the RSI during this move up. You know, sustained periods of overbought results and a very low period of negative results. Obviously during this long-term correction we've seen the opposite, just a small peak above the RSI here and a series of oversold conditions together, showing that we're in the corrective phase. We haven't put in another oversold condition since the low here on August, so if we now get back into overbought, match this peak here, bring the momentum up above this peak here and continue to impulse in price action and then get a series of overbought conditions, we can assume that we are back into an impulse wave and heading higher. What wave degree, we'll wait and see, but like I said in the Elliott wave analysis part of the video, we just want to get out of this downward channel, record some impulsive behaviour and take out this high here. That would fill us with confidence that and then we'd look at our indicators to see if it was supported. So that's it, that's gold and silver. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And as always, big thank you to my Patreon subscribers. Your support is greatly appreciated. And if you're interested in joining the Patreon, there's a link to it in the description below. Go over, have a read of the tiers, see if there's anything interesting. And if you're not following me on Twitter yet, there's a link to my Twitter feed in the description box as well. Alright guys, take care and I'll be back with you tomorrow. Going to try and get a video out every day this week. All the best. Bye bye.